Good morning, everybody, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin with DecisionPoint.com, and I am here with my father, Carl Swenlin. Good morning, Dad.
Morning.
All right, so I'm trying to get everything settled in from ChartCon. I had a great time there. Hope a lot of you went and enjoyed it as well. All right, we are not registered investment advisors, so all trading decisions are your own. Anything we say in this trading room, particularly buy signals, sell signals, buy points, sell points, none of those should be considered a call to action. The Q&A box is for you to talk to us, so go ahead and leave your questions and symbol requests in there. And then the chat box is for you to talk amongst yourselves. Just be sure that when you put in a comment that you use the drop-down menu on top to send it to everyone. If you're having trouble viewing this, or if things aren't very clear, the charts aren't clear, make sure that you have 1080p for your YouTube, as well as trying another browser if for some reason you're not getting the kind of quality you think you should. All right. Any idea when ChartCon videos are going to be available? I do not know that, but I suggest you send an email over to StockCharts.com. And let's see, what else do we have already in here?
I asked that question and it should be today, sounds like.
Oh, good, good. So if you attended, you will have access to that recording. I'm not sure how it works for anybody who didn't sign up on time for the event. So you'll have to talk to StockCharts about that one. All right, Dad, I'm going to hand the screen over to you to go ahead and give us our market update and discuss anything that is on your mind regarding the market.
Okay, that's fast.
Well, we got to get this moving.
Okay, well, we had a blowout day to the downside on Friday. We had, we'll get to that chart, but it was a climax day. And as I say, we'll get to that. Right now, it looks like we're going to hold above this support. That could change later today, of course. But right now, it looks like that's exhaustion climax on Friday, downside exhaustion is taking hold, and that maybe this will be the bottom of this particular decline. Not the end of the bear market, but a chance for another short rally, something like that maybe. Notice that the PMO topped below the signal line. That's a very bearish sign. And I should mention, though, that when I see these, they tend to be short-lived, although it's still a pretty good sign that things are going to go south. The new highs and new lows chart were definitely still showing a positive divergence. Basically, today's down bar should exceed yesterday or Friday's, but basically we want to see a lower low price in terms of a positive divergence. Right now, we're looking at this price low and this down bar versus what we're going to show today. But right now, it's not a positive divergence. It's reflecting what is actually happening. But this is a really good place to find bottoms, folks. So that's one of those charts you should keep an eye on. The Silver Cross Index for the S&P 500, 400, and 600 is, sorry, I got to get something out of the way here, all right? Basically, we've got positive divergences on the large cap and the mid-cap indexes. The Silver Cross is basically just agreeing with price. And it's something I should point out. We have the Golden Cross and Silver Cross indexes on 21 different market indexes and sector indexes. Here's the list. There's market indexes and the gold miners, and then we have the sectors. Currently, I've got it set on technology just to take a quick look at that. And basically, I don't see a divergence here. It's pretty much the same. Keeping in mind that the price index is not a contained index. It can go up infinitely up and down to zero, but the Silver Cross, Golden Cross, and then stocks above their 20, 50, and 200 EMA, these are a fixed range index. Finite range is probably better, from 100 to 0. So here you can see, let's see, here's the Silver Cross. This is on the 2020 bear market, and it got down and stayed down. So it's once it gets to here, it's hard to guess exactly what's going on with the rest of the range, the price range, and the moving averages. Okay, let me do the climax assessment. Here's all these indicators update at the end of day. This is the current. This is current as of right now. The price that is, but the rest of them update at the end of the day. And you can see on Friday we had very strong downside indications. We had climax indications on all these primary indicators. Now, on the up-down volume ratio, this only applies to upside price moves, and down-up volume ratio applies to down. So we would ignore one of these sets based on which way the market closed. But as I said, let's look at here we had an upside initiation here, an upside exhaustion, a day of pause, which can happen. The price on this day stayed within this pause range, so it was not entirely clear what was going to happen next, although we did have a downside initiation index climax, and that was followed on Friday by a downside exhaustion climax. So basically, we get initiation moves or exhaustion moves, and this helps us maintain a little bit of context and orientation to what's happening with the market.
Now, typically those signals, I think we should probably tell people, are usually, they're really short term. I mean, sometimes they can turn into a major inflection point for the market, but really when we see those, they're just giving us an idea of the next day or two, at least to my estimation.
Right. They're very short term, although they can occur at long-term tops or long-term bottoms, but they're short-term indications.
It was great you just explained that, because one of the questions at ChartCon was, what is a climax as far as, we're concerned anyway?
Climax, let me go back to the chart before I answer that. We consider you see the blue dotted lines I've drawn on all these charts. And basically that marks, it's an arbitrary point based on what we've seen in the past. So it has to exceed these lines up or down. And it's basically an excess of activity towards one side or the other. Does that sound about?
That sounds
right?
pretty much the
All
way
right.
you taught me.
Okay. So let's look at our short-term indicators. The STO, Swenlin Trading Oscillator for breadth and volume, and they got very oversold. And now it looks to me like they'll be headed back down. They've topped, so they could, what we would be looking for is lower price and with a higher, price being lower than this low, and then the lows on these indicators being higher than these lows. That would be a positive divergence and a very good indication that the market's going to rally.
All right, we're just getting another question still on the climax stuff. Does the VIX give us any clues? I mean, I know that we consider that in our climax analysis as well.
Okay, I'll go back to
I know. Well, it's a pretty important concept, I have to say.
Actually, yes, we have the VIX in here. And essentially, we're watching the Bollinger Bands applied to the VIX. Our VIX is shown with a reverse scale and on a logarithmic scale, which is totally the opposite of what most people use it. But we look at the lower band as we display it as being oversold, and the upper band being overbought. Now, what we see on down moves is that the moving average of the VIX is a point of resistance. So it gets up to, like, we got a rally here. The VIX hit the moving average and it started back down. And it looks like today it's going to be hitting the lower band. That's basically what these arrows just show, when these bands are touched. And I do it only on the first time of a particular move. So we have here, it bounced up, and now we have 4 more times, but I just show the arrow on the first penetration. But no, I think that's going to do it.
I think we've given it a pretty good explanation.
Yeah. Okay. Now, notice on the short-term indicators, I rarely talk about these, but these are something, the lower charts, panels, I don't talk about this much, but it's percent stocks greater than their 20 EMA, which is a short-term indicator, and a percent of stocks with PMOs rising. And you see it can move from one side to the other of this range pretty quickly. But this is just some additional input. Okay, our intermediate term indicators are IT breadth momentum and IT volume momentum indicators. And you notice that it hit its low right here at this price low. And now it bounced up, and on Friday it ticked downward. And again, these will not update until the end of the day. And what I am seeing, what I'm envisioning, and no way of knowing it's going to happen, but my feeling is it's going to probably bottom again, but not below this. But you know what? I'm going to wait to see this happen. I'm going to wait to see some indications that we've got it a little, but that we have, things are turning around. And I wouldn't be betting on an up move just yet. Before, we've got the dollar index, rallying again, and it's in an up move. It had a pullback. It had a parabolic up, short-term parabolic up, and it's correcting back. It corrected back to that rising trend line, and it's moving up again and maybe making a new high. This has not had a good effect for gold. And actually today, the dollar is up 0.41% and gold is down 1.6%. So there's some weakness in the gold market that's not accounted for by the up move in the dollar for today. Let's just take a look at the dollar gold chart. Okay, we've got support here, which managed to get above, and I'm not sure. This is a chart again that updates end of day dollar gold, but we've got. I like to look at these charts for the longer term indications for gold. Crude oil rallying out of this above the declining tops line. OBV is following through. PMO is positive, positive in respect that it's above the signal line. So I'm still positive about oil in spite of this long 3 month, actually 4 month downtrend that we had. Treasuries not doing well today, broke down over this, broke down through the support of drawn across this low. The 10-year Treasury, again, that had a parabolic move, short term, moved back to the rising trend line, and it is moving higher. To actually, yes, it's still higher today. Bitcoin, there's a triangle formation here, and in a bear market, which Bitcoin is in, it's a very low percentage chance that it's going to break out of that triangle, up out of that. It's going to probably break down. Looking at Apple, it's in a massive downtrend here, and slightly rallying slightly today, but it's really dragging the major indexes around. Okay, I think that covers it, and I'll pass it back to you, Erin.
All right, let's hope my screen shares properly here. Okay, I've got a new screen, so I'm still struggling with all of that.
Yes, Erin got some new equipment last week, and you'll notice she's got a new camera which fuzzes out everything behind her. So now she won't have to clean up her office.
Well, actually, it normally doesn't do that, but I knew my office was a little messy, so I went ahead and blurred it out today. So what I'm going to do is start off with the sectors, and I wanted to look at what's going on via the candle glance. So I'm going to set that up. Now you'll notice my candle glance is probably going to look different than your candle glance. If you decide you do want to have a candle glance style like mine, or just the way you would like it, simply go ahead and save your chart style, set it up the way you want, save your chart style as candle glance. So name it candle glance, and you will now have this setup when you do your candle glance. All right. So looking at all of the sectors, we were finally starting to see some positive momentum. We were finally starting to see some price support being hit and held. And now we're starting to see more breakdown. So really, when I look at all of these sectors put together, really the one that strikes me as the most bearish currently would be XLRE, and then partnered with XLU. Now, both of these sectors are considered more defensive in nature. So it's not a great thing to see these moving lower, but it also says, well, maybe we're going to get that rotation into those aggressive sectors like technology and comm services. And when we look at those on this, we can see that technology, not so much. We are losing major support here. In particular, we do have this PMO topping beneath the signal line, which is especially bearish. We really want to be looking at sectors that are at least holding their June lows, and XLK is not one of them. So where are the ones that we do have holding June lows? XLY, interestingly enough, is holding its June lows. XLP, not so much. XLE really is where we're seeing most of the strength currently. We do have some earnings that are going to be coming out in both the discretionary area in XLE and XLP this week. It should be very interesting. Pepsi, for example, in XLP, we will probably see some action there, hopefully to the upside. There does seem to be a sense of optimism about earnings season coming up. We'll have to see how that all plays out. I've been a fan of XLV, the healthcare sector. I still am, but I'm really not liking the look of this PMO turning over. We still do have the buy signal intact, but if we continue to see lower prices today and tomorrow, certainly that signal will go away. So the only sectors right now on buy signals would be XLB, interestingly enough. It's also looking fairly strong. It's not holding those June lows, but I do like this sort of cup with handle shape on it. And XLE, you can see, of course, that PMO buy signal looking pretty good here. So ultimately, when I look at these, I think XLI has a little bit of a positive note to it based on that PMO, but I want to go look at XLI a little bit more closely because this one has been kind of that one underneath that's kind of been quiet. And I've wanted to see what we are getting underneath the surface. And you can see that cup with handle shape, which is nice, a good bottom. But RSI staying negative, you can see that we've still got the PMO. It is flat, but it is on a sell signal. This is really what we're looking at as being the problem for most of these sectors. And that is what we call our under the hood indicators, the participation indicators, the Silver Cross, Golden Cross indexes, and the percent stocks above 20, 50, 200. I think you explained that pretty well earlier, Dad, so I'm not going to get too far into it. But you can see relative strength really starting to increase on XLI, but it's really not being reflected so much in price. And this is just one more example of how using the SPY as a benchmark isn't really going to tell us too much right now, because if relative strength is starting to rise against the S&P, that doesn't always mean that price is rising in comparison to the S&P. It just might be going down slower. So we have to take all relative strength studies with a grain of salt. But more of the problem right here is the participation underneath the surface for XLI. We're not seeing that turning up. Right now, we do see that price is higher for XLI, so we could see a little bit of an expansion in the participation here. But one of the things that I look at with this participation is the fact that we have more stocks above their 20 than we do above their 50. Most of them are set up like XLI, with their 200 being the top, 50 and then 200 or 20-day EMAs stacked negatively, a bear stack, if you will. So the first thing that's going to improve under the surface would be price getting above the 20-day EMAs. So this does give us a sense that there is some improvement going on under the surface, but really all in all, I would say that the sectors of most interest are going to be energy, which is still doing quite well. And I think that materials are starting to look pretty interesting as well. But notice that on materials, we have the same amount above their 20 and 50. So I don't find that to be particularly helpful. It means that those that really were doing well are staying above the 20 and 50, but we're not really seeing any improvement. It's the same amount. So it's got to be the same couple of stocks right here that are likely above those 20, 50, and 200. And they're the ones that are pretty much holding up some of the indicators here, with the Silver Cross being flat and the Golden Cross being flat. Same amount of stocks pretty much above all of those. But I do like the look on materials. I didn't like the look of gold though, Dad, when we looked at that. So
No.
we do have to keep that in mind as well when we're looking at materials. Let's go ahead and start looking at some of the industry groups. I think that energy is going to be kind of the key one to look at.
Erin, could you go back briefly to the candle lance display?
Yes, easily done.
Easy for you. Okay. Now you're hovering over XLP. And I wanted to point out on the upper right corner of that chart is a little garbage can. Now, that if you click that, it's going to remove that chart, but it's also going to take that symbol off that list. So
yes,
you want to use that only with a temporary list, one that you don't care. I had trouble with that some time ago.
Yeah, it's, one of the things that I like to do that I think it's a little off subject, but when I do my scans, I put them in what I call a chart list called scan dump. I know that it's transient. I know anything in there is likely to be erased. And so when I dump all those scan results in there, I can go through on a candle glance and do like we're talking about, just go and hit the delete button, takes it out of that chart list. I can start narrowing things down. But if you have those chart lists like this one, where you don't want to lose any of those, just be careful when you're in that candle glance not to hit that little trash can on those chart lists that you
also, I wanted to say, just look at all those charts. And, the idea is that you track sectors so that you can favor one sector over another, but they all pretty much look like junk right now.
Oh.
And the most positive one is energy, and it doesn't look all that great.
No.
But this has to do with indexing, and people are buy the SPY, or they buy some mutual funds, S&P 500 fund, and every stock in the index gets bought in order to cover that. So there's a question here. Can candle glance be seen in a 5-minute time frame? If so, how do you set it up? Yes, it can be set up in any time frame you want. I don't know if we want to go into how to do it at this time.
Yes. But it's a matter of really the chart style that you set up for your candle glance.
Right.
Ultimately. So if you want to see 1-minute charts over 2 days, 5 days, set up your chart style to look exactly like what you want for your candle glance, and then just save it as candle glance. So if you're interested in mine, send me an email, support@decisionpoint.com. I can send you my candle glance chart style, and I'll show you my industry group chart style. And if you want that as well, just send me an email. I'm trying to catch up on a lot of things since being at ChartCon, so I definitely appreciate your patience as I try to get to those emails for you. All right, so I do have an industry group summary, and this one, I believe the candle glance, you save it as industry group summary, I believe, or industry group. I'll have to check that for you. I'm a little bit drawing a blank on that right now. So what we do here in this industry group summary is they break it down by sector, and then they give you all of the industry groups within it. This is the chart of whichever one you have highlighted. So you can look at them and go, for example, okay, broadcasting and entertainment, as Dad said, all of them look terrible. But we can see, okay, well, it's holding that previous support from the end of September. Fixed line telecommunications, certainly not a place you'd want to be in if you were in comm. So I'm just going to go down and we're going to look at a few of those sectors. Like I wanted to talk about energy, of course. We can look a little bit at consumer staples. I know that, as I said, Pepsi is going to be releasing its earnings this week, and a lot of people are feeling pretty good about it. You do see the June low has been broken, though, for this particular group. Notice that we have a death cross on the chart. 50 dropped below the 200. And we're looking at March lows now for support. It doesn't look so good to me, especially when you see that death cross coming in there. So energy, where is the strength? Well, you noticed on the XLE chart, really, we were getting to this area of overhead resistance, and we are starting to turn back down. Oil equipment and services, same deal. At least we can see a silver cross possibly coming along the way. PMO just got positive, stochastics above 80. Really what I'd be looking for is these key moving averages to hold as support. We want to see a little bit of a bounce off of that. I have to say that I was really hoping to see some flag formations. I would not call these flags. This really just has that really topping look to it. But, we could consider it a flag if it continues more, but I don't know. It just doesn't have that flag feeling. Certainly something like this, not a flag, looking pretty ugly there on that tip over at overhead resistance for integrated oil and gas. Exploration and production, same little deal here, hitting overhead resistance, turning down. So here we have the strongest sector, really, when you look at all of them, as my dad also said. And what are we getting here? We're not seeing any particularly great movement. Pipelines really got hit hard. They already have seen the death cross on that particular chart. Little bit of a short-term rising trend is still holding, but the fact that it couldn't get even above these key moving averages before turning down makes pipelines definitely look a little bit more shaky than the others. I had noticed coal was starting to make a move, and I think we talked about that last Monday. Still looking fairly good. This looks a little bit more flaggish than the others, and you can see PMO had this nice buy signal in oversold territory. So maybe while the oil services, integrated oil and gas maybe don't look quite as healthy, we do know energy is one of the more healthy sectors. This seems to be what might be carrying it along here a little bit, and that is in coal. So I would say that would be a group to keep an eye on going into the rest of this week. I've heard a lot of discussion about banks, which are going to be reporting earnings as well. They are sitting on key moving average, or I'm sorry, key support, but we have a very ugly PMO top beneath the signal line. Stochastics looking pretty ugly, but I think you should keep banks on your radar. I know I will be tomorrow for the DecisionPoint diamonds. Healthcare. Like I said, I've been a fan of pharmaceuticals, but they really aren't going anywhere right now, still holding support, topping. I mean, really some of the areas that I was really excited about, we started to see this downturn, and it's just turned everything inside out and upside down. So now it's back to trying to find that relative strength. Although relative strength, I just talked about not being that helpful, but we're really looking for not necessarily a relative strength line that's going up, but we're looking for some strength in terms of price. I mean, we need some price movement that's holding some support and not coming up to key moving averages and turning right back down. It's just not helpful. All right, I think I'm going to go ahead and move on into the symbol requests. I had so many of them in the ChartCon trading room. I'm hoping some of you who were there brought some of those symbols, and hopefully I will be able to get to all of them. I tried to speed it up a little bit. I know, Dad, you're always going, move it along. So,
right, let's get started. Okay, AEP.
Woo, not a good look here. It is helpful too when you do your symbol requests, if you really want me to kind of key in on whether you're planning on trying to hold a stock, whether you want to go long, whether you're looking at it on the short side. That's always helpful as well. So of course, my first look at this, I have to kind of, I'm not cringing, but it's certainly, there's nothing on this chart that's positive to me. Lost support in a major way with a very strong decline. We are seeing a bit of a pause, which makes sense. Usually you get those strong declines, you're going to see some kind of a pause in the way, but I think this is a pause. I think we're going to be seeing even lower prices. I want to take this just to a weekly.
Yes, please.
Yes. because you can't really see support. So we have to really go to the weekly to see where is that strong support lie. And, really we've lost the first level. We lost that not last week, but the week before. And now the next level of support is way down here at about 78.50. That is still a drop of, well, goodness, almost 7%. So if you have this and you're kind of waiting on it to see if it's going to make the reversal, your risk level is at 7% before it might turn back up. So I'm not a fan of holding this. And then Dad, I don't know about you, but the first pattern on this chart, the weekly chart that I see is double top.
Double top and and then your neckline, confirmation line, actually. There's a bottom there at the beginning of 2022 that it's basically, it looks like a support it's bouncing off right now.
Yes.
So that's the
hope.
Good enough, yeah.
Yeah, because we do have that low in these tops. Absolutely right.
But the PMO is straight down right now.
Yeah, it's not a good look. I want to just talk a little bit about the 5-minute chart. I'm not going to get into it too much because this is not something that I would be interested in buying. Honestly, I wouldn't be interested in shorting it just because there are those support levels there for it. But the 5-minute chart, what we're looking at is only for entries and exits. I don't use this to decide if I want a stock or not want a stock. I come here strictly to find out where to enter and where not to. An entry, a conservative entry, is a PMO crossover buy, the 5-minute RSI being positive. So in this case, the first buy point conservatively arrived right about here, just shortly after the open on this giant candlestick. Hard to say where you would have gotten in at that point. The sell points are really determined simply by a PMO turning over. As soon as we get negative momentum, I feel like that's just as fine excuse to get out of a stock if I'm ready to sell it. So
Okay.
that's kind of, we'll go with that.
FGEN.
Jen.
Still holding long after your suggestion.
Yeah. Well, I'm glad to see that. I was a little worried when I saw this chart that hopefully it was at least going up until today. Yeah, terrible, terrible day for it. The chart is breaking down, certainly. Let me get the thumbnail on here because I really want to see what's going on with that PMO. Yeah, it's certainly not great. And I think we do need to annotate here just to check how this rising trend is holding up here. So that's the shorter term one, and it is currently holding it. And if I drag this up here, it's pretty much a rising trend channel. So it still looks okay. The PMO is still rising. I certainly am sorry that you're experiencing a bad day on this one. And I am worried about the market moving forward. I think I'd tighten up my stop, certainly. I don't know when you got in. If you want to lock in some of this gain that you may have gotten coming in, maybe this is the time to sell part of that position if you're not ready to hang out. But this is key. I think holding that rising trend, holding the 200-day EMA is really what you want to be paying attention to here. I would just be extraordinarily careful. It is in the pharma area. I still pretty much like that area, but getting to this area of overhead resistance and immediately having a big, horrible down day would certainly give me pause as well. If you were interested in trying to find a good sell point, obviously the best one came in here where the PMO turned down. It is trying to turn a little bit back up. So if you did want to sell it today, I think you still have a chance of getting a better sell point as that PMO is starting to take a move upward. We're getting a couple of ticks to the upside. But honestly, when you've had to endure this kind of a down day, usually you're going to see a bit of a snapback, but, that's really your risk appetite has to speak for you there.
Okay, moving along. SO, I think that's Southern Company.
I believe so. All right, so utilities look very much like this chart.
Right. I would say hit the weekly and that would be enough.
Yeah. Because this is exactly why, because we don't know what support's actually doing here. We have to go to a bigger one. And I mean, I don't want people to get the idea that we're really looking at intermediate term trades here. It really has nothing to do with that. I know, Dad, you've talked about in your bear market rules that currently there are no buy and holds, guys. You are a short-term trader. If you are in this market right now, there really are no intermediate term, long-term trades. So,
Well, unless you want to be short, and you would have wanted to be short a long time ago for a longer term. But we're, by my calculation, we still have quite a bit to go downward, but that's just me guessing, folks.
well, we all do our forecasts, if you will, what we're thinking about. And I'm with you. I think we're going to still see some problems. Okay, so the first thing, double top, just like we had on the others. The double top is in the process of being confirmed with today's decline. This week, I guess it's not a decline. That was last week. But we did get a little bit of a confirmation here on this double top. This is the 2020 high, so we certainly could see a return. But, these charts you're at this point, I would tell you, certainly you're hitting these points where you would expect to see that move to the upside, hitting those support levels. But overall, the market is so weak, and trying to count on those turns is really, really dangerous right now. So I would say I wouldn't be interested in this in a long. I think that you could consider holding this for a little bit longer because it hasn't completely broken down below the June low, but I would tighten up that stop. I mean, this is why when the PMO turns over on your daily chart, probably a good idea to get out. And as I tell people who maybe aren't regulars here or new watchers, I don't buy anything unless the PMO is up. I mean, I just won't. There's no point. Why would I put myself in that particular risky situation? So the PMO is down. It's still holding support, so I don't see it as a short, and I can see it as a hold, but tight stop.
Yeah, the PMO needs to turn up. That would be the earliest that I would look at it.
Yep.
And Erin waits a lot longer.
Usually, but if stochastics start to turn, this is one of the reasons I put stochastics on too, is because the PMO, yes, we want to see that. But sometimes, stochastics will usually turn up first. And then what we want is that confirmation of the PMO turning up. And Dad, you're right. I tend to be very conservative on my entries, as most of you know who are DP Diamond subscribers. It's just part of my DNA. Well, I don't know if it is, Dad, because you say that I take too long.
Okay, let's go to the next one, SNAP, SNAP.
Okay, so when I look at one of these charts, we're going from $40 down to $10. I mean, you're looking at a decline of 75% going on here. We can't see what's going on here very well, so I don't like to do it, but I'm going to put this on a log scale just so we can actually see the price action and what's been going on. So we got the big gap down, and so far this gap resistance is holding with no problem. We did get that bounce. Looks like it's going to come back down and test this support level, but there are a couple of support levels here. There's your closest, next closest, and furthest. PMO is turned down. It is in the process of giving us a sell signal. RSI negative. Stochastics turning down before getting above 80. Relative strength lines are flat. I can't say that this would be something that I would be interested in. Let's go ahead and look at that weekly chart.
Yeah, not good.
No, there's still downside that it could endure. Not only do we have this low that hasn't really been tested, but
I'm trying to think what SNAP is. What it kind of.
It is like a Facebook sort of idea, Instagram kind of thing.
Okay.
Yes.
All right. So how about CVS?
CVS. This is a pharma. Certainly it didn't help the pharma industry group here. I'm guessing this was on earnings or something. Big giant gap down, hit the support level, and it does seem to be finding support here, but none of the indicators suggest, including stochastics, which do turn up earlier in just about every case, they are still turned down. So I get that you're looking for these reversals on these support levels, but you've got to look for these indicators to at least hint that it's going to turn back up. We're not seeing that. This is a very strong level of support, though, I have to say. You know, you've got this top here, low, low. But PMO still looks pretty ugly. I mean, if we get a little more consolidation, that's going to turn this into a reverse flag. I mean, double top. I mean, there's so many things here that tell me that this is going to be a high risk type of investment.
Okay, how about snow?
I think I saw this one on the ChartCon trading room. Ooh, not so good. Losing short-term support as well. Big down day. Let's see, what is this? Software. Okay, tech. You know, we got to be careful there. But again, really, I mean, if anybody can find one that I like that I would go long on, I would challenge you to do so because there aren't too many out here. Loss of support. We know all of these indicators look bad. I think we go ahead and look at the weekly chart. I don't think we need to go to the 5-minute chart for this.
Yeah.
Overhead resistance. There's that level we saw on the weekly. I mean, when I look at this, I see a drop down to where it was before. Maybe you get lucky and it's here on that first week of the IPO. But that's 25%, guys, to the downside. I mean, I could see this one as a possible short simply because it has lost this short-term support, but we have to also consider the fact that, you know, support is still lying nearby for it to find a home. But a PMO top beneath the signal line, if anything, this looks like a possible shorting opportunity. But I would want to wait for the bounce back, which is almost certainly going to happen after this big decline.
Okay, CNC.
These are all those areas, and I expect that some of, I know none of these are diamonds, but I know that this was an area I really liked, admittedly, and it's just not following through. So we've lost support here. We're gonna have to go to the weekly chart, but let's take stock. Let's take a stock of what the indicators are doing. PMO top below the signal line, stochastics turning down in negative territory, underperforming the S&P. I mean, I wouldn't want to be in the SPY, but this is even underperforming that. So I definitely wouldn't want to be in this. Centene, we're going to look at that weekly very quickly.
He says he wants looking to go long in the 60 to 70 range.
Okay, I can see that. I think that you might
60.
even wait till under 60 because this is the support level really is between 55
a lot of congestion in there, yeah.
Yeah. So the 60s, you know, you're going to be looking at still a lot of, it's still vulnerable to the downside. So if you're looking at this one, I'd be watching more in that 55 to 60 range as a possibility. But yes, definitely not now.
Okay. NVDA, NVIDIA.
Oh, NVIDIA. All righty. Loss of support on the daily chart. Again, we don't have any support levels to even make a comparison to. PMO is about ready to give us a crossover sell signal. EMA is already scheduled. I mean, laying on there the wrong way. Weekly chart. Well, you know, we are sitting on some pretty strong support, I have to say, but if it loses this support level, the closest support level after that is down here at this top back from 2020, tops back here from 2018. That, my friends, would be
Yeah, it's really bad looking.
30% decline. So I can see wanting to get in here on this support level, but you're going to need some more confirmation. And I think, Dad, you might actually agree with me on the confirmation here, but you will really want to see that confirmation of a PMO turning up, particularly the stochastics. At least let's have them hinting that it's going to hold this longer term support level, because right now, that is key. And if it can't do that, we've got some lower prices to endure.
Okay, there's a comment from Paul Brenner. Great job at ChartCon 22 on Friday and Saturday. Enjoyed your appearances.
Oh, well, thank you so much. I certainly enjoyed my time there.
Okay, CF and wheat. I don't know if those are related.
No, but let's look at wheat. I really like the look here. I do believe this was a diamond last week on ETF day. I could be wrong, but I know it's been on my list before. This is a really nice look. If you own it, I don't see any reason why you wouldn't want to keep it. If you wanted to get in, honestly, I'd be trying to be a little greedy and maybe wait for a bit of a pullback, but we're going to look at the 5-minute chart on this one, because this actually is one that I like. So whoever gave this one out, I'm going to give them first prize because they finally found one that I like. Let's look at the 5-minute chart for entry. Okay, so see, we will get a pretty decent entry, I would think, because the PMO went on that sell signal on the 5-minute chart. And the beautiful thing is as it's pulling back, it's pulled the RSI out of overbought territory. PMO hasn't turned back up yet, but I think that given the strength on that daily chart, I wouldn't need to wait for a PMO crossover on the 5-minute. I think as soon as you start to see that turn to the upside, that would probably be a good entry on it. Or if we see a continuation of what's going on right now, as it turns up right on this level here of support. So I'm liking the look of this. I think if you have the time to hang out and watch it a little longer, that you might get yourself a little bit better of a buy point.
Okay, BTU.
All right, we can come back for CTF or CF if I have time, but I want to get everybody's in. Well, as many as I can. We've got 3-4 minutes actually, since we started a bit late. Okay, so overhead resistance hit, turning back down. And honestly, overhead resistance wasn't hit. Anytime I see that where a price gets to that resistance level, top of a trading range or the top of a rising trend, and it doesn't actually test it or touch it, I find that to be especially bearish. So we have to be very careful. But the indicators are still positive here. Like I said, looking a little bit toppy, but wow, we actually see one with some decent relative strength here too. This is in the coal area, which we did highlight at the beginning, midway in the program. So this does look like a pretty nice one in that industry group that I am paying very close attention to. I don't know that we need the weekly chart in particular, but it's always a good exercise to look at it. I see, let's see, there's still some overhead resistance to deal with here, but we need to get above that resistance level. And if we can and test the top here, that's a 23% gain. So I like this one. I really would hope that it's going to get above the resistance. The PMO, I'm going to add one more thing here on that.
Well, it's in a rising trend since
yeah,
since 2020 actually.
Yeah.
And it's consolidating as it's moving higher. So I'd say it looks pretty good.
Yeah, and you've got the PMO on the weekly chart turning up. So I think congratulations, you found another stock or ETF and that I like. So Congratulations. Let me see real quick the 5-minute chart. Not a buy point. We're actually at a sell point with that PMO turning over and now with the negative crossover. This would tell me, yay, I'm going to get a better buy point. So you want to hang around as soon as that PMO starts to make the turn. We really like the daily chart. RSI is still staying positive. I think an entry today on a PMO turning up would be very interesting.
Okay, MLCO. I think this will
Nice.
have about a minute left.
Yeah, this looks good too. It's pulling back, but it's holding above the 200 PMO. RSI no longer overbought. I mean, these big pullbacks do offer some nice entries here. Stochastic still above 80. We don't know OBV yet, but it was confirming this move to the upside. Certainly relative strength looking nice. Gambling, I think I've heard they're having a big convention or something in Vegas. So it might be getting some highlights there. Might want to look at BJ because that is the blackjack or the gambling ETF. But this one looks pretty interesting. I mean, let me see the weekly. You know, it's turning down right at overhead resistance. Actually, it hasn't even really reached it, but everything else looks pretty solid on this chart. I think you can make a case for a possible purchase here. And we lost our buy point because we had the crossover, but the RSI moved into negative territory. So you could still consider an entry here because the PMO is rising. But looking at what the RSI is doing here, as I said, I like to see some confirmations here. I probably would want to see that RSI get positive. All right, Dad, I don't think we have time for any more.
Nope.
I want to thank all of you for joining us. If you're watching the recording, you can join us live by clicking on the link if you're watching on YouTube and register for the trading room. And then you can get your symbol requests in and ask us live questions. So all of that going, we're going to go and wish you good luck and good trading. Have a great rest of the week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.